Welcome back. This is Open Exchange and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, let's get in some F&O strategies. I think we have our guest with us as well. Sneha Seth joins us. Hi, Sneha. Morning. Could you run us through your picks for today?
Look at market, we are seeing an up move beyond the resistance, what we have seen 17,700 in case of Nifty and in case of banking index above 42,600. So I'm expecting an up move. Individual counters, what I'm liking is ICICI Bank. If you see this counter has been making higher top, higher bottom formation. And yesterday we have seen it going up nearly 2%. So I'm expecting an up move in this counter. We would suggest buying 920 call option in the range of 13.5, 14.5 with a strict stop loss of 7.75. We should buy this counter for the target of 27. Apart from this, I'm liking Delta Corp. We have seen this counter making a strong base around 185-190 zone, and we're expecting a trend line, falling trend line breakout in this counter. So I would suggest buying this counter with a strict stop loss of 194.9, and a target will you can expect is around at least around 210.
All right. Thanks very much for that. So that's the F&O trading ideas coming through. Just 2 minutes to go for the pre-open session. And we'll see how things are right now. We have Kiran Mazumdar joining us now, Executive Chairperson of Biocon and Biocon Biologics. She's joining us right now to talk to us about the latest news which is coming in. Now, this is with regards to Biocon Biologics. There was a deal which was struck between Biocon Biologics and this Serum Institute of Life Sciences back in 2021. Under which Biocon Biologics was to give 15% stake to Serum Institute at a post-money valuation of $4.9 billion. Now we understand that there are changes to this particular deal. Ma'am, thank you for joining us. Good to have you with us here. Prashant this side. Could you explain what are the changes?
So, like you very rightly said, there was an original deal that was struck in 2021 about offering a 15% stake in return for certain financials linked to vaccines. Now that has been replaced by a straight equity, investment, whereas, Serum had already invested 150 million in Biocon Biologics, and there was a loan that is now being converted into equity, which will add another 150 million and make it an aggregate investment of 300 million. At an approximate aggregate valuation of 6 billion. So I think that's the change in the restructured arrangement that we now have with Serum Institute.
Okay. Ma'am, hi, this is Ekta. This is something that we discussed in your earnings gone by, that, there is a possibility of this loan which is going to be converted into equity. So now with this $300 million investment in Biocon Biologics, how much stake does Serum hold?
Yeah, so if you know, the original 15% stake obviously is replaced with this. So you can do your calculations, The 300 million will then be, given a stake at a $6 billion enterprise valuation. So, you can do the math. So it won't be, obviously, it will be much lower than the 15% stake that was originally planned.
Okay. What is the change when it comes to the vaccine distribution? Because that has actually been on the market's mind for some time now, because COVID-19 vaccines were a part of that particular deal. Yep. But now that COVID-19 has taken a backseat in terms of vaccination as a whole, the street was wondering what the partnership, what the strategic lineup would be for those 100 million doses. So what does it comprise of now?
Yeah, so I think even originally it wasn't just confined to COVID vaccines, Ekta. It was going to, basically include the complete portfolio of vaccines that Serum was developing and did have in their existing portfolio. But as you know, the demand for COVID vaccines is waning. And so obviously we now have to wait for their new vaccines, which are a few years away in terms of launching. So I think from that point of view, we expect to still have access to the $100 million doses of vaccines. But it'll take a slightly, it'll take a different kind of orientation in terms of the way we commercialize the vaccine.
Okay. All right. So it'll probably have a different way in terms of commercializing. Ma'am, Serum has taken a lot of interest in Biocon Biologics, $300 million in terms of an equity investment. What is the strategic or larger plan that Serum has in mind with Biocon Biologics? With the this kind of equity investment, they do also have access to biologics, which is, a new frontier of growth when it comes to generics in the US. So what kind of long-term strategic plan do they have? Do they want to increase stake beyond this $300 million?
Obviously, I have no optics on that. And, I don't think I can make any comments on their behalf. All I can say is that, yes, the biologics business is a very attractive business. I think Serum Institute was very keen to invest in a biosimilars business. And, as a part of that, we also discussed the vaccine business. And if we have a strong commercial engine in global markets, I guess vaccines also then offer a good, opportunity for both companies in terms of marketing.
All right. Thanks a lot, ma'am, for joining in and giving us all those details with regard to this deal that's been restructured as of now.
Thank you.
Well, let's move on then. AMI Organics, that one, has been buzzing around of late. Over the weekend, they announced its foray into the semiconductor space. The company has acquired majority space in the specialty chemicals maker, Baba Fine Chemicals. Mr. Naresh Patel, the executive chairman and managing director of the company, joins us on the show. Hi, Mr. Patel. Thanks so much for joining in. Well, you could fill us in with a couple of details. I'm looking at it as of the last year. This company that you're acquiring did around 47 crores of revenues. What is the peak revenue potential in this particular company, if you could tell us that? And also, back of the envelope margins appears it's a very, very high margin business. Could you tell us what were the margins achieved in the past year and how you see this going ahead? I think you're on mute, sir. Could you unmute yourself?
I'm sorry. Okay, thank you very much for inviting us on your channel, for putting ourselves in front of the people. Basically, this acquisition is in line with our strategy to enhance our fine chemical portfolio. And both Baba Fine Chem and AMI Organics has a very good product profile, grown very well, and that make us grow in the future. Baba Fine Chem last year revenue was, this FY23 stated revenue somewhere around 47. But that semiconductor industry is a very entry barrier industry. It will be a very difficult to enhance and put your product inside. So AMI Organic has decided to see that if there is opportunity available, which can shorten our time to put our chemistry and our product in the system. So this is how we find Baba Chemical is a good partner. But the profitability in Baba Fine Chem is good because the semiconductor is a very high pure material where you can have a very less competition, and that you have a little bit leverage.
Right. Mr. Patel. Mr. Patel, you've given us a detailed release actually, and quite a bit of what you're saying has been mentioned out there. So we're looking for a couple of numbers. Revenues have moved from around 26 crores to around 47 crores in the last 2 years. Where do you see this revenue number move to? And EBITDA margins as well. Running a little short on time pre-market, so that's why we're asking you this.
Okay, so revenue can be easily go up to 5-6 fold in next 3-4 years, and margin will be a little bit suppressed, but it will not be that less as what we are in chemical industries. So this is where we can able to say like that.
So margin is more than 20%. What is it? I mean, what is the margin on this acquired asset?
It will be remain in 40% around.
40% margin.
40% in the acquired asset. All right. Will you be looking at investing more in this company and taking it up to 100% stake at any point in time?
Yeah, basically Baba Fine Chem was run by 3 scientists, and they had done a very great job and developed 30-40 molecules, and currently they are only selling 4-5 molecules. So it's a very big, strong pipeline is already there. So we need to invest.
Mr. Patel, I'm asking you, will you be putting in more money and raising your stake to 100% in the company?
Yeah, that is in a near future, that will be the plan. Currently, we are happy with the controlling stake and we want to operate it with our strength of operation. And later on, sooner or later, we will go to have a better positioning in the company.
Mr. Patel, you said that revenues can grow 5-6 fold in the next few years. But let's just drive it back to a slightly more basic question. What exactly are these sort of chemicals which they make, and who are the end customers of Baba Chemicals? Who do they supply this to? Yeah.
Okay, so basically their main customers sitting in USA and they are making photoresist and some other chemicals which are very specially used to make the PCB as well as the semiconductor base and all. So that is where the more applications are there. Also, by introducing ourselves in the system, we can also enhance the market with our current positioning in the world. We have more than 50 countries outlets, so we can also target Korea, Japan, Taiwan also parallelly.
Okay, all right. A couple of questions here. You're saying that the revenue potential is 5-6 times. That is closer on 200 crores. Do you have to invest more money to, take this revenue potential up? If yes, how much is that? And also you mentioned that you all will look to increase stake from 55% to 100%. So at what valuation will that be done?
Okay, that is a future question, but currently the company is a debt-free company, a very cash-rich company, which is Baba Fine Chem, and it has self-sufficient for making the further investment. And if needed, then AMI will be happily take positioning in terms of investment. But currently, the company Baba Fine Chem can be sustained for next 1.5 years with their own.
So, what is the cash on the books currently, Mr. Patel?
Cash on the books is somewhere around 12 crore.
Okay, so will you be using any of that cash, or will you be raising debt at any point in time to acquire more companies? Are you looking at any more acquisitions in the next 1 to 2 years?
Okay, so the cash on the book is for the Baba Fine Chem, I've told you, and for the our strategy is to enhance fine chemical segment in a different area. Like we have very good positioning ourselves in electronic, also in agro and cosmetic. Now we are also focusing on polymer industry for making some polymer catalysts and also UV absorbers. So this is where we are working on in organic acid enhancing fine chemical segments.
Okay, all right. Final question, Mr. Patel. I'm aware that you're in the silent period, so we don't want to ask you about Q4. But given that this acquisition comes into your fold in the second half of this year, you've been doing around 150, 160 crores per quarter. From the second half of this year, will you be delivering revenues in the vicinity of around 200, 210 crores per quarter?
See, basically, historically, we are growing at 20-25%, and that will be remain like that in our system. So anybody can easily derive the numbers.
All right. Thanks a lot for joining in and appreciate your thoughts. Thanks for telling us all about this acquisition. Well, that's AMI Organics. The market, by the way, is very quiet. So looks like we're going to open with a tinge of green on the screen. Biocon is up almost about 2.5% and a couple of other stocks like Persistent Systems are also hanging on the green side. In fact, Persistence is, I think, flitting between red and green. So we'll wait by for that to adjust. Let's get Sudarshan on board. Sudarshan, what's the big call at 9:10?
BHEL. Buy BHEL will stop under 75.
Okay, and Mitesh, how about you?
I'll go with the buy on IDFC Limited with a stop at 82 for targets of 88.5.
All right, thanks a lot for that. Well, Himang Jani is still with us, so let's get him on board. Himang, I don't know if you heard the conversation we just had with the Biocon management. Any thoughts on that or any other pharma stock that catches your eye lately?
So, Sonia, in terms of this development, though the company will get some funds into it, I do not see any material, impact in terms of their revenue. And as she also said that, future vaccines that will come, it will take its own time. So I don't read that as necessarily positive for Biocon. But in terms of pharma sector, there is a bit of a revival. And we think that, some of the names like Sun Pharma, where the recent development which has happened, we don't think will have any material negative impact on the earnings. So we think that there is going to be some sort of a stability over here. Also, maybe some of the mid-cap names like Ajanta Pharma, or Alchem, that is where we continue to have our positive bias.
All right. Thanks very much, Hemang, for that. Let's actually revisit the deal which was announced yesterday, which is the Unichem IPCA Laboratories deal. Back to Ekta, just to highlight the terms of the deal once again, what the street is making of it more importantly. Ekta, back to you.
Thanks for that. Well, yes, for IPCA, the news last evening is that they're going to buy 33.38% stake in Unichem at around 440 rupees per share, which totals to around 1,034 crores. And IPCA is going to buy an additional 26% stake via an open offer at around 440 rupees. That would total to around 805 crores if it goes through entirely. Now, the purchase price of 440 is a 13% premium to Unichem's closing price yesterday. What exactly does Unichem bring to the table for IPCA? Remember that Unichem had already exited its domestic business in 2017 when it sold it to Torrent Pharma for 3,600 crores. Now, what they have is the international business left, and within the international business, 55% of their sales come in from the US. They have 3 formulation, 3 API facilities. All of the facilities which are inspected by the US FDA are in compliance status. So that is a big positive for IPCA because they have 3 facilities under import alert since 2015. But Unichem has been underperforming financially. It could be margin dilutive. They have paid a hefty sum for it in terms of valuation. Hence, you're probably seeing the stock lower because of those reasons.
Okay, thanks a lot, Ekta, for that. We have 2 more minutes to go. Maruti is another stock on our radar this morning. It's announced pricing for its much-awaited entry-level SUV, the Fronx. And the pricing is looking pretty competitive if you look at it compared to peers. So it's starting at 7.46 lakhs ex-showroom. And it's at a discount to key competing models like the Tata Nexon, Hyundai Venue, even the Kia Sonet. And this is a very, very competitive space. So let's see how Maruti does here. Macquarie put out a note where they said that the success of the Fronx and the Jimny is very crucial for Maruti to achieve that a 25% SUV target. And there you have it. That's the new Fronx, the entry-level SUV that everyone's been waiting for. Right. Not bad. I mean, priced very well as well. It's up 10 lakhs, so could do really well. Maruti is currently sitting on 18% market share in the SUV segment, and the target is 25%. They have an outperform. Macquarie has an outperform with a target price of 10,500, while Nomura maintains a neutral with a target price of 9,928. They say there could be a risk to cannibalization from the Baleno at the lower end and from Brezza at the higher end. Any takers for this one?
No, I committed to Bajaj. I can't do this.
You're committed to the Triumph. What about you?
Not really, Sonia.
Too small for you.
Yeah. Too big. I mean, do we really need to add one more car to the Mumbai roads?
There's no space to walk anyway.
For the greater good.
Okay. Well, let's get straight to the market opening now. It looks like it is going to be a largely flat opening with a bit of a positive bias. But we'll take what we get, given that yesterday was a good day. Will the market build on to its gains? Time will tell. IndusInd Bank, Bharti, Adani Ports, Maruti are a couple of stocks that are trending in the green at the moment. So there you have it. The first tick on the index, the Sensex is up about 40 points. The Nifty is up about 17 odd points. So it is, a pedestrian start, you'd have to say. Absolutely flat and quiet for the Bank Nifty as well. The good part is just hanging on to the green line now, led by Reliance Industries, Maruti, Bharti, IndusInd Bank. Bajaj Auto ahead of its numbers is looking good. ICICI Bank continues to pile on a bit of weight post a good set of numbers. And then you have something like a Hero MotoCorp, etc. that is trending in the green. On the red side, UPL is under pressure. We were talking about that. HDFC Life a tad bit soft. Dr. Reddy's, Tech Mahindra, HDFC, Infosys. In fact, a lot of IT names, Infosys, HCL Tech, have been under pressure, Tech Mahindra as well. Now the Nifty has drifted into the red. So it's giving up on some of its gains. Crompton, by the way, is the big loser in the broader market, so just keep an eye out on that. 9% gone on Crompton. Street definitely doesn't like the news flow over there, but more on that in a bit. For now, the market is quiet, but not building onto its gains from yesterday, and that seems to be a bit of an issue.
Well, that's right, Sonia. Let's run you through a few earnings reactions. Then Persistent Systems, those numbers were quite good, but the stock is more or less flattish as we speak. Let's pull up, the deal that was announced late last evening. IPCA Laboratories as well as Unichem. Unichem, I think the initial tick was much higher. That's in fact now tapered down. It's down close to around 0.5%. But the street believes that IPCA has paid too much for not a great margin business. So that's why, in fact, that stock has taken a hard knock down close to around 7% or thereabouts. Mahindra Life, well, they made a big announcement overnight. They bagged a society redevelopment project in suburban Mumbai. Revenue potential of close to around 850 crores. So that's up close to around 2%. As Sonia mentioned, too many rejigs at Crompton Consumer Electric. Street doesn't like that. That one's taking a hard knock and volume's very, very high out there. Nelco came out with its set of numbers. The stock has opened up in the green. Let's see whether or not it's holding out there. And Mahindra Logistics as well, because of the full integration of the Riveco acquisition. Well, that one as well is, I think, opened up. Actually, Mahindra Logistics is in the red as we speak. So Street hasn't taken that positively. But Nelco is flying away, up 7% as we speak. And a few more names. I think IIFL Securities, the stock had opened up in the green. So let's see how that one is doing. Positive reaction was the initial take is what I saw on that one. Prashant, what else?
You got the railway stocks. I mean, at least I can spot RVNL with a 4% gain. The stock's at about, 91. Zomato is up 3%. I think there was a City note this morning at about 58 or so. Zomato has got some green. Indocent is up 2%, 11.25 on Indocent. These are the three large volume-led names. You've got Gland Pharma, which is coming up with a 4% pop. I mean, by the way, it's not a bad volume start. Decent volumes across the board. Gland is up about 4%. Indiabulls Real Estate saw a large move yesterday. That buzz around what will happen with that embassy deal. 1.7 on Indiabulls Real Estate, 65 rupees on that one. IRFC was buzzing big time yesterday. It's up another 2%. You got Nelco, which is up about 6.5%. So that's largely, the bulk of the volume-led gains that we have. On the downside, I mean, it's clearly the stock of the day is Crompton. On the downside, it's limit down 10%. And this is on the back of management changes, which, of course, the street does not like. It's already a huge underperformer, as I was sort of discussing with a guest earlier. And it doesn't look like, at least in the initial glance, that this was any of this was in the price or anything of that sort. So this is a bit of a shocker for the street.
I fail to understand why. I mean, I was going through the realignment of the management. There is Pramit Ghosh who's taking over as new MD and CEO. There's Matthew Job, who has resigned from his job, and there's Pramit Ghosh was a deputy head at Temasek for almost 10 years. So I don't know why the street is reacting like this.
Yeah, I mean, he's qualified, but has he? I mean, I think Sonia, the concern is, has he run a consumer business, right? I mean, he's well versed with M&A, etc. In deal making, but running a consumer business, I think that's where the worry is coming from. But let's see. This is, I think, the initial reaction which is coming through, but it's a strong one. At that night.
Just one more alert, on Zomato. Nimesh had alerted us a few days ago as well. There could be a large trade that takes place out there. I'm just looking at the depth of the buyers, both on the NSE and BSE. The volume is very, very large. The pending buyers at lower end. So let's see whether or not there is a large trade that takes place today or on the next few days. But just thought we'll point that out. Depth on both the NSE as well as BSE is very, very large on both these two counters.
Okay. So keep an eye, Zomato. Atul Auto, by the way, is another one which is down a full 7%, 7.25%. So lots of stuff moving this morning. It's not a quiet day, especially with regards to individual names. So you got IPCA and Crompton, which are 9-10% kind of movers on the downside. And you've got on the upside, it's a little more, it's not as dramatic, but Nelco is up 6%. And slowly these railway infra names are starting to make a bit of a comeback. Well, let's get in our market master of the day. It's a quiet start. Harsha Upadhyay is Chief Investment Officer, Equity at Kotak Mutual Fund. And he's joining us right now to take some questions. Harsha, good to have you with us here. Thank you very much for your time. A fair bit of deal making, fair bit of single stock kind of changes and movement, etc. But on an aggregate basis, Harsha, how is your view evolving across funds that you manage? Are you getting very bullish? Starting to sort of deploy very heavily, or you still believe that we will be in a sideways market, which means that slow and steady is the way to go in terms of deploying funds?
Good morning, Prashant. Clearly, we believe that it's going to be a range-bound market, at least in the immediate term. The earnings upgrade cycle that had started the post-COVID has kind of paused for the last 3 quarters or so, and is unlikely to see any resumption anytime soon. So to that extent, unless we see another earnings upgrade cycle, we don't see too many positive triggers for the market at this point of time. Yes, because of our time correction for last 1.5 years, the valuation risk is probably a lot lesser in the current market conditions. Having said that, there is no reason to believe that markets can make a large up move at this point of time. So to that extent, our positioning has been cautiously optimistic, and we still have little bit of cash in most of our funds, which will gradually get deployed.
Okay, so cautiously optimistic on the market. Got that. Just wanted to point out on Crompton, the reason perhaps why you're seeing such a steep fall, I'm just reading out of a brokerage report, is that not only is there a lack of operational experience for the incoming CEO that the street is worried about, but there have also been multiple changes in the leadership team in the past. So that is an uncertainty that the street definitely doesn't like. Previously, the CFO resigned in May of last year. The sales head resigned recently. So, the street is concerned that there is uncertainty in terms of strategic priorities and the execution approach. And now, once again, this reorganization of the structure. So that's what's plaguing the stock. But Harsha, thanks a lot for joining in. So if you're cautiously optimistic, what are you buying? What are you avoiding? First, let's get to the technology space because the trend is a bit diverse here, right? You've had weakness in numbers like Infosys, but then you've had good numbers from the likes of Cyan, Mastech, etc. Your thoughts?
On the IT sector, we continue to remain slightly underweight at this point of time. We have seen some weakness from at least leading IT companies in terms of last quarter numbers. And while the debate is still on whether it is company specific or it's due to overall macro conditions, etc. But to our mind, we believe that valuations are not so attractive that you can really take a large outsized bet on the sector at this point of time, especially given that macro challenges still remain, and whether it plays out immediately or not is difficult to say, but definitely I think there are several verticals, for example, telecom, etc., which are seeing really large amount of pressure. And anyways, even on the BFSI segment, one needs to remain cautious as far as the IT sector is concerned. So to that extent, we believe that keeping an underweight stance at this point of time is much better. And there are many other domestic focused businesses which we believe will have better earnings trajectory as we go forward.
All right. Hi, Harsha. Morning. Thanks so much for joining in. So underweight on IT. What about the new age themes, Harsha? Some of these stocks, they're a third of what they were at their peak, maybe for good reason as well. But now it seems some of that management commentary is turning around. It's more shareholder friendly as well. And some of these businesses are fairly decent. What's your view on it? As we speak, I think Nykaa hit a fresh 52-week low, while you have Zomato that's showing some traction this morning itself. Any view out there?
Nigel, clearly this space is still quite expensive as compared to the overall market. And as you rightly mentioned, there are still concerns in terms of the capital allocation policies of some of these companies or the possible stake sale that would come from earlier investors, etc. So to that extent, given the current market conditions and where these companies are trading at, we would remain cautious on this entire space. Yes, there would be some stock-specific positions that we have in our portfolio, which we will monitor. But overall, as a space, I don't think we will take a very big positive view at this point in time.
Any new areas of interest, Harsha?
Nothing new as such. We have been looking at some of the segments where, if at all, there is some volatility during the earnings season where we could build. We will only be looking at sectors where there is some steadiness in terms of earnings. There are 4 or 5 sectors where we believe earnings growth is going to be quite healthy as compared to the market over the next couple of years. For example, banking, auto, cement, industrials. And in these pockets, if there is any large correction for whatever reason, and if we believe that those corrections are transient, maybe we'll look to deploy some money in some of these names.
What about, since you're talking about banking, right? The one thing that stands out this quarter is that retail loan growth has come back in a big way. It's been in excess of 25% for a lot of these large banks. And we'll be having that discussion in a while from now as well. But do you stick with the, retail-oriented private sector banks, or are you now looking to put fresh allocations into PSUs as well? Not just in SBI, but outside the index too?
We have fairly large allocations to both public sector as well as private sector banks at this point of time. However, if you look at our portfolio, we have preferred only large names within these two subsegments. The thesis is simple. While we have seen a large amount of repricing on the loan book as of now, and that has led to quite a strong NIM trajectory in the recent past, we believe that at some point of time, as cost of deposits would tend to move up, we may see a little bit of squeeze in margins. So to that extent, some of the larger names would have a better ability to maintain their low cost of deposits. So to that extent, our preference would be to some of the large banks, both in the private sector as well as in the public sector space. Yes, there is a section of the market which believes that the net interest margins could get compressed as you go forward. While that could happen, but I think, as you rightly mentioned, the credit growth scenario remains quite healthy, both on the retail side as well as on the corporate side. So to that extent, I think any compression in the NIMs would be well compensated by the growth. So overall, this is one space where we believe earnings trajectory is going to be quite strong for the next 2 years as compared to the market.
Another completely bombed out space has been the generic pharma space, Harsha. Those stocks like Aurobindo, etc., recently over the last 1 month have come up. Any thoughts here? Would you look at this space favorably?
Prashant, it's a difficult space, as in there are no top-down drivers for this sector which you can look at and take a big call on the sector. So to that extent, we have been stock specific. We do have a couple of names in our portfolios. Yes, there are some names in the pharma sector which are likely to post good earnings growth over the next couple of years. Those names, if available at slightly lower valuations, we would be probably looking to explore those names rather than taking a big sector-wide call on the pharma sector.
Okay, so that's on the pharma space. I wanted your thoughts overall on the market, right? Just before we wrap up, do you think there is enough ammunition that this market has for the sentiment to turn in a big way? I'm not asking about whether we move out of this range. I'm asking you, at some point, are you getting a sense that perhaps the bull market has restarted, or is it too soon to say that?
Sonia, I think it's too soon to say that we have already made a bottom. Yes, there are global macro conditions which are challenging. So to that extent, even if India earnings growth continues to be in the low double digits as of now, which is the trend line, there could be some volatility in the market just because of what's happening around the globe. So I think we will have to bide time and see when the earnings upgrade cycle is going to start. In our view, I think maybe in the next couple of quarters, somewhere we could probably start seeing some improvement in terms of the earnings trajectory across many sectors. Because if you remember, June quarter last year was the quarter where input costs had really gone up, and that's where the margins had plummeted for most of the manufacturing segments. So to that extent, there is a possibility that either in the June quarter this year or in the September quarter, we will probably see a better earnings growth than what the market would expect. And if that were to happen, then maybe that would kind of signal a new earnings growth cycle. But until then, we believe markets could remain range bound.
All right, Harsha, final question before we let you go then. I don't know whether you've gone for a vacation of late, but you try to book a hotel room or, the travel and the hospitality space, that's booming big time. I go to the airport, it's full. You try to book a room, the rates are high, its occupancy is high. What's your view on this space? In the rebound trade, it worked very, very well. But now what's the view? Does it have more steam out there, or would you all avoid it at current valuations?
Nigel, we do have a couple of names in our portfolio which are from aviation, from some of the other consumer discretionary spaces. Yes, in some cases, maybe the kind of expectations that have been built are so high that even with the current kind of very strong growth, it's not making a meaningful impact in terms of the stock performance. But clearly, I think over the next a few quarters, this space is definitely going to remain very strong in terms of growth. And if margins were to come back, as we are seeing across the board input costs coming off, that should also help. And also in some of these spaces, we are seeing a large amount of consolidation, for example, in the aviation segment. And that should only help some of the leading companies in the space to derive a better profitability in the coming years.
Okay. Just one last space, because it's been top of mind for the last many days, is real estate, right? The commentary that has come in from a lot of these players, Lodha was the latest one that said that it could be a multi-year upcycle now. Stocks are also starting to price that in. DLF has been doing pretty well. Any thoughts here and any fresh allocations to this sector that you would like to make?
Clearly, real estate sector remains in an uptrend. And also, since we are seeing a pause in terms of the interest rate cycle, that also augurs well. The affordability will remain quite high for Indian customers in that sense. So overall, this space remains one of the attractive sectors among the domestic businesses, I would say. But again, you will have to take a call based on valuations within the sector.
Okay, Harsha, we'll leave it there. Thank you very much for your time. Appreciate you joining in with that perspective. It's always a pleasure. By the way, the circuit on Crompton is open, and it is, I think, it was down 10%. It's down 12% now. So 259. It's sinking more. So that's a pretty steep cut coming through on the back of the changes. So that clearly is the stock of the day in terms of just sheer price move. Happens to be on the downside is all. IPCA is down 7.5. That is the other at number 2 position. And I can spot many others now coming through. So UPL is down about 2%, which was not there earlier. Max Healthcare, by the way, huge volumes on Max Healthcare. It's down just 1% though. Atul Auto has picked down volumes. It's down 8%. So that's another one. Cyient is seeing a pullback. Late last week after numbers, Cyient did very well. But yesterday it pulled back. Today it's down about 2.5% as well. And Piramal Pharma is pulling back. It had a flourish, a big move on Thursday last week. And Friday, yesterday, today, 1.25% lower, pulling back. So, I mean, it's not one way anywhere. PVR, HDFC, AMC are some of the other names which are down between 1 and 2% or so. And so this is the stuff with volumes right now. Zomato is the big mover on the upside with a full 6% pop now. Almost $60 on Zomato. And this is, turning out to be a pretty good day for that name. And of course, I mean, the others we've already mentioned, RVNL, Indiabulls Real Estate, Nelco, etc. Ircon has joined the list. Anupam Rasayan is up about 4%, 1,118 on that one. And I think you've got Affle India, Bank of India, etc., which are joining the list. I saw, I think, an initiation of coverage or maybe an update from a broker, I think it was Elara, on HCC, Hindustan Construction Company. That is up about 4% or so. You don't see that often nowadays, but it's coming up with gains and some volumes as well. Sonia.
The IPCA lab, the investors are really upset with that Unichem acquisition, it seems. I mean, 8% gone now. And, as Ekta was telling us a while back, this Unichem business has grown in single digits for, what, 5-6 years now. So the street definitely doesn't like the use of that money. And the stock is down about 8%. But the other stock under a bit of pressure right now is UPL and Mahindra Life. So let's go straight to Sonal to find out why. Sonal, over to you.
Thanks a lot for that. Well, UPL is in focus because the global agrochemical company Adama reported its Q1 calendar year 2023 numbers, and they did not look so good. Even the commentary was on the muted side. First, let me run you through the numbers because revenues were down 11%, EBITDA was down 18%, adjusted profit was higher at $22 million. But in terms of their commentary, the company did say that Q1 continued to see decline in crop prices. If the crop prices decline, that means lower demand for agrochemicals as well, and that is something which would have hit their numbers as well. They say quarter saw early purchase due to product availability concerns and supply shortages. So the supply chain is also seeing some problems right now. Customers are in a wait and watch approach for crop protection purchases. So they have actually delayed some of their purchases across the globe. And the similarity here is that UPL also caters to the same geographies that Adama does, the likes of North America, Latin America, Europe and India as well. So that's where the stock is seeing some cuts right now. On the flip side, Mahindra Life Spaces is in focus because they've won their second redevelopment project in the city of Mumbai. They call it a big opportunity as well. This is for a society redevelopment project in suburban Mumbai, that's in Malad. The revenue potential is around 850 crore rupees for the company, and they are going big on redevelopment as well. So that stock is higher in trade today.
Okay, all right. Thanks a lot for that. So now let's hop across to Reema. She's joining in to tell us about Nelco, and the volumes are picking up out there. The stock is up nearly 10%. Reema, numbers really good.
Yes, indeed. So quarter-on-quarter revenues have gone up by 10%. Year-on-year, there is a revenue growth of 14%. Margins are expanding. So quarter-on-quarter margins are up 150 basis points, while year-on-year we've seen a margin expansion of 280 basis points, and the current EBITDA margins stand at 20.5%. That's the reason why the bottom line at 5.6 crore is also significantly higher on a sequential and on a year-on-year basis. Now, Nelco is a company which provides, it's in the communication space, it provides VSAT terminals, which is typically used for ATM, but now it's increasingly getting into to the satellite communication space, though the monetization of the SATCOM business will perhaps take some time. But generally, the street has been very excited about Nelco. An additional thing that also Nelco provides is maritime and airtime communication. So it has tie-ups with a few airlines by which it does provide Wi-Fi services on airlines as well. Back to you.
Okay, Rima, thanks a lot for that. Well, the market now is very, very quiet. So let's do one thing. There's big news in the primary market. The Mankind Pharma IPO opens today. So on the other side, we'll be joined by Rajiv Juneja, the Vice Chairman and Managing Director at Mankind Pharma. The company is set to open its large, they're going to raise almost 1,300 crores. They already raised 1,300 crores from anchor investors. More fundraising coming through the IPO. More on that in a bit.